Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ELME Communities quarterly report. ELME Communities offers a range of businesses and services that cater to middle-income renters in the Washington, D.C. metro and Atlanta metro regions. The company's portfolio includes multifamily apartment homes, approximately 94 units, commercial space, approximately 300,000 square feet. These offerings provide quality, affordable housing options for underserved mid-market demand, ultimately building long-term value for shareholders. ELME Communities stock price movement. A year of significant changes over the past year. ELME Communities, NYSE, ELME, stock price has experienced substantial fluctuations, far exceeding a 1.64% threshold. Several key events have contributed to these changes, including planned asset sales and liquidation, analyst downgrades, and significant financial results. The company's announcement of voluntary liquidation and the sale of a 19-asset portfolio for $1.6 billion led to a 12.18% surge in shares on July 2, 2025. However, this was followed by an analyst downgrade from Truist Securities, which lowered its price target and caused the stock to decline. ELME Communities' third-quarter financial results revealed a net loss of $123.5 million, primarily due to an impairment charge related to properties not included in the sale. The company reiterated its plan for sale and liquidation, pending shareholder approval, and stated it would not declare or pay future regular quarterly dividends if the plan is approved. The stock's volatility over the past 52 weeks has been significant, trading between a low of $13.95 and a high of $18.08, representing a fluctuation of approximately 29.6%. The company's annual performance figures also demonstrate substantial gains, including a 13.44% gain year-to-date in 2025 and a 9.5% gain in 2024. These events collectively indicate that ELME Communities' stock price has undergone significant changes due to major corporate strategy shifts, financial reporting, and analyst actions. The primary drivers of revenue growth or decline can be summarized into three main categories: residential segment growth, real estate rental revenue increase, and capital expenditures. On the other hand, revenue decline is primarily driven by other segment performance, real estate impairment, and ongoing operating expenses exceeding revenue generated. Residential segment growth is a significant driver of revenue growth, with real estate rental revenue also contributing to this trend. Higher rental income, lower vacancy loss, and lower credit losses have all contributed to increased revenue. Conversely, the other segment's decline in performance has led to a decrease in revenue. Real estate impairment and ongoing operating expenses exceeding revenue generated by remaining company assets are major drivers of revenue decline. Additionally, difficulty continuing as a going concern due to reduced assets and potential inability to dispose of sale portfolio for allocated purchase price is also a significant factor contributing to revenue decline. Net income and profit margins. A shift in trends. The net income of the company has undergone a significant change over the period. Initially, it decreased from $1,765,034 to $1,611,309. However, this trend reversed as the net income increased from $3.7 million to $4.8 million for the period. A closer look at the net loss reveals that it decreased by $2,970 to -$123,514 in the 3 months ended September 30, 2025, and by $10,088,000 to -$131,755,000 in the 9 months ended September 30, 2025. This indicates a reduction in losses over time. Profit margins have also experienced fluctuations. The residential segment's NOI margin decreased from an implied 59.6% for the 9 months ended September 30, 2025, compared to no specific percentage provided earlier. Similarly, the consolidated NOI margin decreased from 60.7% to 59.9%. The primary reason behind these changes is attributed to the increase in total compensation expense due to share-based awards. This has had a significant impact on the company's net income and profit margins. The company's financial performance indicates a positive trend in its operating cash flow. Despite reporting a net loss of $131,755, the company's total net operating income, NOI, stands at $116,900. This discrepancy suggests that the company's expenses are being managed effectively, allowing it to generate significant NOI despite the net loss. The operating cash flow figures for 2024 and 2025 also support this conclusion, with a slight increase in both years. Overall, these indicators suggest that the company is generating positive operating cash flow. Management is reaffirming the company's commitment to qualifying as a REIT and has outlined plans for its future. The company intends to undergo liquidation and dissolution through a plan of sale and liquidation, which will involve selling off remaining assets within 12 months. To achieve this, management has secured debt financing from Goldman Sachs Bank USA in the amount of $520 million, or $565 million, and is exploring additional capital requirements. The company also plans to sell up to $350 million of common shares through an equity distribution agreement with multiple agents. Additionally, management aims to complete the sale of remaining assets and wind down operations within 12 months, ensuring adequate liquidity over this period. If the proposed plan is not approved, the company believes it will have sufficient liquidity beyond 2025 due to no debt maturities until 2026. The company has made several significant transactions in recent years. On the acquisition side, it is worth noting that the company acquired real estate properties as part of its growth strategy. In terms of divestitures, the company has undergone a major restructuring effort. This includes the sale of all its properties and certain remaining assets through a portfolio sale transaction. Additionally, the company has initiated a plan of sale and liquidation, subject to shareholder approval, which will involve the liquidation of its assets and business affairs. The company has a history of paying dividends to its shareholders. This is evident from the financial summary and specific pages that confirm dividend payments in various years, including 2024 and 2025. The declaration of dividends per common share on page 24 further supports this conclusion. Additionally, explicit statements on pages 26 and 36 affirm that the company has indeed paid dividends. That concludes the financial summary for ELME Communities. Feel free to comment below, and I will be happy to answer them when possible.